If you were to ask 3 different traders, what is swing trading? You're going to get 3 different answers. All right. And most people look at swing trading based on like the time of day, or maybe the price chart that you're trading from, the time frame. I look at swing trading totally different because I look at it as in a pattern that happens every day that you can take every day to make money. And the pattern looks kind of like this: trend up, trend break, retest to new high, right? It kind of looks like the Flash logo for the superhero Flash. And what it has in common with Flash is it can help you get to the money in a flash, or the profits in a flash, or as we like to say on this channel, it can help you increase on the sudden. And like Flash, the superhero, if you learn this pattern, you can go from 0 to hero in no time. Okay, so what we're gonna do is we're gonna investigate this pattern, and also make sure you stay to the end of this video because I'm gonna show you a trade example where we put this pattern into practice. So let's go deeper. So the pattern that I am referring to, I call it the market cycle. And it looks like this: trend up, trend break, retest to new high. If you've ever watched many of my videos here on YouTube, you've seen me draw this pattern, talk about this pattern. Trend up, trend break, retest to new high. This was the high. This made a new high. This pattern happens all the time. If we just look at this price chart right here, following the 21 EMA, trend up, trend break, retest to new high. This was the high, came all the way across, bam, new high. All right. So what I like about this pattern is that it's natural to the market. It's natural to price action. And it happens like every day. Okay. Many people focus on lots of types of patterns, like the head and shoulders pattern, for example. And I like the head and shoulders pattern. When I see it, it works, but it doesn't happen every day. It's the problem, right? I don't see the head and shoulders pattern every day. So you have to have a high level of discipline and patience to wait for that type of pattern, because it just doesn't happen every day. But the beautiful thing about the market cycle and what I call a swing trade, it happens every day. And I'm gonna tell you why it happens every day right now. So let me start with a little lesson here. The origin of every trend is a range, all right? The market can only do 3 things. It can range, trend up, or trend down, okay? Those are only 3 things that the market can do, all right? So knowing that, I already know that the origin of every trend is a range, all right? But let's talk about this range a little bit. When the market is in a range, some would call it consolidation, some would call it accumulation. What's really happening is big banks are putting in orders, little chunks at a time, because they don't want to show their hand completely, but they're putting in orders. And this is why you're getting that range action, right? They're getting their orders all put in for the day, all right? But eventually, that same institutional bank, I'm talking about big banks, institutional banks, I'm talking about your JP Morgan Chases, I'm talking about your Bank of America, I'm talking about your Barclays, okay? As they get those orders in, eventually they're gonna put a big order in that starts the trend, all right? And we're gonna rock it out of that range. That's why the origin of every trend is a range, all right? So once those banks put those orders in, that gets the market going. And if you need to learn more about how the banks is really playing into trading and how trading is a banking game, you need to get my guide, the Insider's Market Guide. Just comment below, give me the guide, and I will send that to you. But the banks, trading is a banking game, all right? But eventually they're gonna get that thing going, right? You're gonna get a leg up. But that first bank that put all those orders in here, let me change colors. Put all those orders in here, eventually they're gonna stop buying, okay? And then other banks and other institutional traders, retail traders, you know, they're gonna say, hey, that market is over, and they're gonna start pushing prices back down, right? And then you're gonna get a leg move back down. But what happens is that these banks here understand that, hey, for us to shoot out like this, there was a lot of market buy pressure right here. Some big bank, put a lot of orders in right here. So the traders that's here that went short, they're saying, yeah, I'm gonna sell until we get back around here, then I'm gonna get out, because these big banks here are going to protect their orders by buying aggressively again. So what happens is that when these traders get out, they have to buy to get out, right? That automatically makes the market start heading back up. Then these banks that started to run in the first place may be putting in their second bundle of trades, right? And they push the market up. Then retail traders like myself see that a second leg is about to take place, and I'll jump in and start buying. Next thing you know, boom, we're shooting up. And if I clean that up, what you're left with is a trend up, trend break, retest to new high. Okay, that's what's happening behind the scenes, and this happens every day. This is why it's so much better than just trying to wait for like a head and shoulders pattern, or a reversal head and shoulders pattern, or all the other million patterns that people trade. My market cycle pattern, man, it happens every day. Okay, and you can trade it both ways. It's gonna trend down, trend break, retest. If I look at the same price chart here, we had a humongous drop. Now this was because of some news, but we had a humongous drop, 2 legs back, right? And then bam, started a new leg. Now I didn't make a new low, and that happens, right? It's trading, nothing's 100%, but you could have won going long. And I can tell you right now, this was actually, I might as well show it to you. This was a 50% retracement from the top here, if you're a fib trader. So say you grab a fib, pull it on down, bang. We had this low, we made 2 legs up right to the golden ratio 618 sweet spot, and boom. And if you take this entry back in right here, that's a 28-point drop, okay? So when you understand the market cycle, right, it plays into everything else that's happening into the market. And just understanding this one pattern, trend up, trend break, retest to new high. If you can learn to spot this one pattern, you can go from 0 to hero. So I am telling you, this has to be, in my opinion, all right, my humble opinion, one of the most powerful patterns that you can trade, because it's very easy to see. It's very easy for a beginner to pick up. All you need to do is add the 21 EMA to your price chart and follow the 21 EMA. When prices are above the 21 EMA, we're trending up. When prices are staying under it, we're trending down. Once you identify that first leg trend, wait for the break, expect a retest to new high. You do not have to take my word for this. I guarantee you, if you will look for this for just 1 week, if you will go on the ES futures, look for this market, add a 21 EMA to the price chart, and just look for this one pattern, you will see it happen over and over and over and over and over. And it's like being able to predict what the market is going to do, because after you get a trend up, trend break, there is a high chance that the market is going to try to retest to a new high. Even if it doesn't make it to the new high, like in this case, we had a trend down, trend break, a retest new low, and it didn't make the new low, it still went 28 points, okay? So if you're just trying to grab 10 points a day, trading this pattern allows you to get those 10 points, 5, 10, 15 points. You can do that on a consistent basis, okay? So you want to go from 0 to hero. Look out for the market cycle. Look out for the trend up, trend break, retest to new high, trend down, trend break, retest to new low. And it's a very simple pattern that any newbie beginner can pick up and start to profit from, okay? So we're gonna go over to a chart lesson. Now, excuse me, let me scratch that. I have a trade example, and this trade was nothing but I saw a trend up, I saw a trend break. Then I had a higher low entry that I actually took and then kind of shot myself in the foot in. But then once we were breaking to the new high, I just re-entered again. So you will see exactly how I took this trade based on the market cycle. And you can do the same thing too starting tomorrow if you just add a 21 EMA to your price chart and see that market cycle, all right? So let's roll the footage and then I'll come back. All right, we got a good one going here. We're hoping we can get 2 legs up. Let's measure it out. This is leg 1. This is leg 2. So I'll put a target here. Then I'll leave one up here just in case we catch a run today. So we'll see. Good trade, great trade. Great trade, locking in profits now. Locking in profits. This was a good one. This was a good one. Keep pushing. Push up. Push up, push up, push up, push up.
Stop, Phil.
Great win. We'll take it. Awesome. Hey, I hope you enjoyed that trade example. Again, the market cycle is a very easy pattern anybody can pick up, and this is what I call swing trading. This is my example of swing trading, because you get the first leg, right, and then it pulls back, and then you catch the swing. This is my example of swing trading. Like I said, there's a lot of definitions out there, but the way I look at swing trading is by catching the second leg of a market cycle. Okay. So again, if you want to learn more about how the banks are playing into this, grab my guide, Insider's Market Guide. Just comment below, give me the guide, and I will personally send that to you. And check this video out right here where we talk about if you have a small account, no problem, I got you. Check it out right here. Till next time, my name is JD, and as always, I wish you increase on the sudden. Remember to like, share, and subscribe. Hit that notification button. Catch you next time.